Today's move, Bill, was, big. It wasn't massive, but it does show you that people's fingers are a little light to the touch these days. Anything will set them off.
You know what, if you look at the conditions in the market after the 4th of July holiday, volumes are very low. We've been running daily Treasury trading volumes at around 60 to 70% of the 20-day average over the last 2 days. You get news like the Donald Trump Jr. news, and that's enough to get people who are nervous and looking for something to do. Even so, we've got some big events coming up with Yellen testifying tomorrow, the CPI data on Friday. And as we're speaking, we have Fed Governor Brainard giving a speech here in New York that I think will be closely watched as well.
Yes, the speech. Tell us why this is such a major speech, and also why Janet Yellen's testimony is so big this time around.
Well, the Fed's at a point where, or the markets are at a juncture right now with 10-year yields, let's say around 236, 237, where it's all coming down to the inflation data. In a May 30 speech, Fed Governor Brainard, in a way, exuded some questions about whether the inflation dip of the last 3 to 4 months is as transitory as the Fed states it is, for example, in the minutes or the Fed statement back in June. And therefore, I'd say between now and the September FOMC meeting, what the markets really want to see is traction on the upside in inflation. Otherwise, I think they'll take some bets off.
The market's been wanting to see that for how many years now, Bill?
It's been a long time, and a lot of people are increasingly worried or thinking that we're becoming more like Japan, which has the tightest labor markets, I think, in Japanese history, yet no inflation over there. So this whole question about the level and slope of the Phillips curve for wages, I think by September, if we don't see, for example, on Friday, CPI pick up, I think people are going to be concerned that this is maybe more secular and less transitory.